What's up, guys? JJ Fade 23. I'm going to show you guys Quanted, which is a great tool I love for back testing. It's pretty much, I can go on here, put in my initial criteria, then get a look at all the charts and start breaking stuff down from there. I love this tool. One of the guys that used to be in my room created it, and it's really good for breaking down your overall stats and then narrowing it down from there. So, for example, all right, so we don't have the 2024 gap is on here yet, but we do have, we'll just use 2023 for example now, all right? 2023, January 2023 to, we can go to December 29, 2024. So let's see here, 123 to 12 months. So that's pretty much almost 2 years pretty much. 123 to 124, and then the end of 24. All right, now after that, the price range I like, and this is all because I've already done this before, is $1.50 to 10. I don't like cheapies. I don't like stocks less than $1.50 because they could be sitting right on top of $1. A lot of stocks, once they break over $1, they don't go back below it. And I don't like them also because the halt bands are tight, and penny stocks, halt bands are super tight a lot of times. I'm just not into that. So I found the sweet spot being $1.50 to $10. Anything over $10, you start to have a little much different price action sometimes than a plain small caps. All right, so gap percent has to be at least 45%. Now, we also want the pre-market volume to be at least 1 million, which is pretty much like always like that now on any biggest percent gain is. And then the market cap I found to be 350 million, the highest I want to go for A+ short subs. Okay, so now we just come down here and we hit search. Of course, it's going to fucking... Of course, I knew that was going to happen. I tried to test it before, but anyway. All right, so now I'm back. I'm back in the same place where we just were. All right? Back in the same place where we just were, and now we just want to search. Oh, by the way, guys, the time frame, I mean, I always just keep it the whole day, but it's usually this gap is in the morning. I don't usually trade stocks that run after the open unless it's a late day fade or something. Anyway, so this will tell you all the gap is, all right? It's usually like 200 and something per year that fits my criteria. So this is going to be almost 2 years, so 420. But as you'll see, right, guys? Let's just finish, all right? All right, so 420, all right? Now, guys, I usually use the median because the averages, as you know, takes the like crazy outlier ones into consideration, which it doesn't really change all that much. You know, the thing that changes is the spike percent, right? So it doesn't really change the close rate, but look at this, guys. So with no other criteria added to your chart, 75% of these close below the open. So honestly, when people ask me what's easier, trading small caps or large caps, how could anything be easier than knowing that 75% of the stocks you're short selling are going to close below the open with zero other criteria added to that, right? It's crazy. But I usually put this on median. Now, if you'll notice, see, look at median. This is the change from open to high of day. So we have the closed green 24%, closed red 75%, which is great. Now, the ones that I care about most is right here, the median change from open to high. That's the average spike of the stock. So if you put the average in where they take the median stock, if you use the average, look at how big it goes because they have some that ripped 150%, 400%. 1,000%. It makes it, we kick the outliers out with the median. Now look at that. Okay, so now you're starting to see, look at this. 75% of these close red and the median spike is only 16%. Guys, this is how a lot of traders come to their conclusions. You know how many traders have systematic systems where they just short the open with a 30% stop or a 25% stop. This is how they come about doing this. They don't have a high win rate, but it's over like 50%. And they got a decent, maybe a 1.5 risk reward on those kind of trading, which I don't love that kind of trading. But this is why, because 75% of them close red and the median spike's only 16.7%. So you're going to win a lot of trades. All right. So point is, I don't trade like that. I'm just saying I know this is how a lot of people come to these conclusions. So median change from open to lower day, 23%. That's even more than the spiking percent. Higher day to close. So this is another big one, guys. So the median percent from high of day to how much it fades before it closes is big, 30% bigger than both of those, right? So you didn't have to add any other criteria into this, and you know that, okay, I got a pretty good chance of making good money if I'm short selling all these stocks, because most of them close red, 3/4 of them, most of them don't spike that high, most of them have a big huge drop from high a day to close, right? And then lower day to close, this basically tells you that the end of day cover from lower day, the average bounce is like 12%. I still think if you're trading a systematic system, it's very, very hard to find a better cover than end of day. But, yeah, so that's, very good short selling stats here. So now, guys, I'll go down to the chart view. I go down to the chart view, and this is where I work on a lot of my setups, right? Like, this is originally how I created trigger at key levels, right? Like, when I first started trading for a couple years, it was like, okay, obviously everybody talks about daily resistance. So, okay, let me look at a daily chart and see if where the resistance is. So, but guys, this is what was happening. Okay, there's a daily resistance at $3. There's a daily resistance at $4. One at $5. The stock starts to spike into resistance. I would just short it and hope that it stopped there, right? And so a lot of times it goes right through, and I'm like, damn it. Or it goes over it a little, I stop out, and then it comes back down. So I would go crazy trying to figure out how on earth can I like make my system better so I'm just not hoping that it stops at these levels. And then I first created max extension, which I thought, okay, that will help if I have a stock that spikes at least 25% into my pivot on the daily chart, right? But then again, I was missing so many trades that didn't spike. That only spiked 5% and failed. So I kept working on it. Going through these charts, looking and starting to recognize things, okay? This is what you got to do behind the scenes if you want to be a good trader. Okay, so there's two main things that helped my trading, substantially. Just the thing was creating triggers at key levels, right? So not only do I still use max extension, but I don't have to get a max extension. Why is that? Because I created triggers. So let's say, for example, guys, you can't see the daily charts on these, and I don't want to keep swapping back and forth. We're just going to for examples, all right? Let's say we have a daily resistance at $4 right here, okay? So I use 3 triggers: fake breakout, stuff candle, or trend break. And they have to happen just at or just below a key daily level. They can't be above it because that doesn't count because it's breaking out over it. It only counts if it triggers and then it falls back below and stays below. But you don't want to be using a trigger over the key level. So for example, all right, let's say right here we had a resistance at $4. Just right around this area where it stopped. So number one, we get let me see if I can draw. I haven't used this in a while to draw, but let's see right here, right? So let's say your key level is right here at $4. So right here, it goes up, it comes down, it pops up. We have a fake breakout right here, real close to that $4 level. That's a trigger. And also, guys, you have a trend break right here. Oops, sorry. So we have a fake breakout and a trend break right at or just below this $4 pivot. So that would be an entry trigger. Now over here, if you look, right, let's say, now guys, if the key level is 450, I'm not going to take this right here. It's not a key level. And if the key level is at 340, the triggers are above it. I have to wait for it to go below and then make a lower high and stuff below it. All right. So now, for example, let's say right here, we're at 360. All right. Let's say the pivot is at $4 again. All right. We have a high right here that we made, this high. It comes up, goes right near $4, and then it falls back below this level right here. That's a fake breakout trigger at or near the key level. That's a short. So do you see what I'm saying? So this is how I started to do this. And now I'm like, okay, now I only have to figure out my key levels, and now I just need triggers. Okay, here's a pre-market level right here. We know there's a level right here, and we know there's a level right here. All right, now we're on the daily chart. Where is the level though? Okay, if the daily chart level is at $3, then I'm not going to take this. If there is a daily pivot right here, or at like 250, I'm just waiting for it to spike up to it. If it falls back below this level, that's a fake breakout. I short that, risking off above the 250 pivot. Okay, now same thing with over here. Let's say, for example, And now, guys, this is the other thing. Let's say there's a daily level right here. Let's say there's a daily level right here. And here's a daily level at $5, okay? So did we get a trigger at $5? I don't know why I can't do this, right? Okay, did we get a trigger at $5? Yes. Look, it popped up and got a stuff candle right there. So you short that stuff trigger right there when you stop above the pivot. Now, if it pushed way up to here, you would wait for it to stall out in lower high position above the 61 to 78% fib to this level. Or if it blew past that, you would need another fake breakout or a stuff trigger to fall back below before you'd short it. Right? So this will make your trading so you're always entering at the right spots. I mean, you're going to get stopped out sometimes. Don't get me wrong. There's a lot of stocks that will pop up, do a huge stuff, come down, curl back up, and go. That's nothing you can do about that. I call that a gamer. Some stocks are just gamers. There's nothing you can do about stocks that are gamers, but you try to weed those out by using my red flag criteria and certain news and dilution things. So you try to, or float and, high insides, high toots, just crazy slow float, China stocks. You try to weed those ones out. They're going to play the most games. So you're only shorting the best, most likely to dump stocks with gap stats. Okay, so we do all this backtesting, guys. We know overall the stats are great, right? I'm not going to get into too many triggers at key levels, but overall the stats are great. How do we make this even better? Well, how I make it better is by this. I make it better by using my red flag criteria, right? If it has 3 red flags, I nick it. If it's a China stock, I don't trade it, guys, because I don't want to trade these crazy stocks that blow people up. Yes, I'm guessing more than 50% of China stocks fade, but there's the ones that just monsters that blow everybody up, and I would rather let the ones that fade go to never be stuck in the crazy ones, and that's just, I don't care. So, guys, if you take all these things into consideration, plus overall these are all going to tank, most of them, and they're only going to have a median spike of 17%. Now you add red flag criteria. Stock has 90% gap stats or 100% gap stats, or it has, like Zio the other day. Look at Zio. I don't like energy. I don't love energy, but look, Zio. It had high insiders and SSI, yes, but it had such good gap stats. I said, you know what? If this gives me a trigger at key level, I'm going to nail it. And what did it do? It popped and stuffed right off the open, right in low high position. Perfect. So, and VS was actually great too, but VS had 1 red flag. They just didn't have that great of gap stats, which I didn't love. But at the end of the day, if we have good pivots and levels, I know this is the most important thing right here. Most of these are going to dump. So I really just use red flag criteria to keep me out of the crazy ones. And everything else, I wait for my key levels and stuffs or fake breakouts and triggers, and I nail them. And that's just the way I do it. And it just makes it makes my trading. I'm not trading a system as far as the point where it's like short the open, stop out at 35%, cover the end of the day. Not that kind of system, but it's still a system. I go through red flag criteria. The stock either gets kicked out or it doesn't. If it doesn't get kicked out, I look at the chart, I find the daily levels, and now I'm just waiting for the open. I'm watching the spike, I'm watching the average volume off the open, and I'm waiting for my triggers at key levels. Guys, most of these stocks you'll see when you do backtesting, 90%, well, maybe not 90%, but many of these stocks dump in the first 1 minute. Pop and dump, pop and dump. So many just pop and dump like this in the first 1 minute. This happens so many times. Look at that stuff trigger. If you had a $7 level on your daily chart, you're watching this stock, it has good gap stats, not multiple red flags. This thing, look at this. You get this like, boom, stuff off the open, short that shit, stop over 7, boom, right? So it's just like, that happens so many times. Look at another boom, stuff, fake breakout over the pre-market high, stuff, dump, great short. Right here, rips over the pre-market high, no trigger, just spikes, pulls back to the pre-market high. Most people short this spike. Why would you short that spike? There's no trigger. All it did was break over the pre-market high and then come back and hold the pre-market high and start running. No reason to short. But now let's say you have a key level at $3, all right? Okay, we have a key level at $3 on the daily chart. All right, cool. Now, I don't see a very clear fake breakout or stuff trigger up here, so I'm still waiting. Oh, we get a trend break right here. Short, stop over $3. Aim for targets. Wait for the trigger. You don't get blown up, right? Now we're coming down. Right here, look, you guys. So we have the pre-market high. Pre-market high level right here. What else? I don't know. I'm so used to using TOS. Pre-market high. Guess what, guys? let's say this is a daily level in the pre-market high level. Now look, the stock pops up, it comes back down, it pops up again, hits that pivot, and guess what? Fake breakout. Right here. That is a fake breakout on the 1 minute chart. That is a short trigger if this is a key level, which it is from the pre-market high. But even if this isn't a daily level, if it's a pre-market high level, I get a trigger there, I'll take that. You also have a trend break. Guys, this is how you stay safe. You wait for triggers, you don't blow up. Right? Look, guys, look. Look at the stuff trigger right here. Right off the open, you have a fake breakout of the pre-market high. Well, it's actually still, this is the pre-market high right here. But right off the open, you have a stuff and a fake breakout of a high in pre-market short cover. Right? So this is how I just went through thousands and thousands of charts, coming up with ways to make my trading safer and higher risk reward and not getting blown up. And this is how I did it. This is how I do it. Triggers at key levels, red flag criteria, gap stats, and friggin' Quanted to ultimately find out the best zone to stay in to be looking for my shorts. All right. Now again. All right. Again. This one didn't quite do a fake breakout. It would have been nice right here if this popped up higher. If this pivot right here popped up and slammed, you have an obvious fake breakout. Right. So that one was a little different. If you did have a level at 950 or 10, if not, oh well, missed it. Guess what? Right here, you gotta pop up, slam, fake breakout. See, guys, I like these 1 minute. I like these stocks that go like this. They go up, they go down, they go up, they pull back, they try to push over the previous candles, and they reject. And then they cause a dump, as long as you have a daily level there. If not, the other thing I'll be doing is going like this. Looking for a lower high position. Oops, I'm so used to TOS. Sorry, guys. Lower high position from this level right here, right? If that's the high and this is the swing low and it's a gap and crap setup, you want to pop into low high position to take the short, which would be anywhere from the 61 fib or higher. This one kind of like just barely touched the 61 fib, I think. Yeah, just penny touched the 61 fib, right? So that would be a little wide of a risk, but you also had intraday head and shoulders pattern. So you're going to be able to see, you want to notice everything, guys. Patterns, trigger candles, extensions, volume. How much is the volume spiking, right? Like, I don't like shorting stocks that the 1 minute candles off the open are over 2.5 million. If they go up to 1.5, 2 million, great. But if they're only 500,000, even better. Pops quick spike on wicked low volume, I'll short the shit out of that. But if we get boom, 3, 4, 5 million shares ripping up, got to be careful for those. So, you don't have to be first person to short on a stock that's up 100%, right? So this is what I mean. It's always just how would it make your trading better, right? Something like this, I probably wouldn't trade unless it was a really great daily level here because it's so far off the pre-market high. I would want it, personally, I would want it to be come up here into lower high position. If this is, I put my fibs on here, that's the swing low right there. Move over here. So I would want this to spike up to here to give me good risk reward off the pre-market high. But I would still take this if we had a very obvious daily level here. Because in that case, let's say we had a very obvious daily level. Jesus. Let's say we had a very obvious daily level at 550, we'll call it. Which that means it would be a $0.50 plus an obvious pivot. Now, if you look, this is a nice topping candle right here. It's not a very obvious top candle, but you have a huge max extension right up towards your pivot, and you have a nice topping candle. You short that when you stop above the pivot. Guys, I don't always put my stop right above the candle unless it's a very, very nasty stuff trigger or something. This kind of candle, even though it stopped right here inside the dump, I would still put my stop over the pivot on the daily chart just to be safe. Because you don't want this to go like this, pull back, pop up, hit that pivot, do a fake breakout, and then dump and it stopped you out. All right? So, yeah. I mean, I love Quanted. You could go through these charts. They're all the ones that you'd want to be trading for small caps and just try to decipher everything. Just see what can you figure out. Look at another fake breakout of a pre-market high. Short, right? Max extension. That one kind of didn't really give you that great of a trigger. Kind of just went straight up, one candle down and halted. And then it dropped so far you didn't really get a good lower high to short. I mean, you could have shorted here, but it's pretty far down. Plus there's a gap to fill now. Yeah. So, it's just one of those things. You got to see what works for you, but this is how you start and this is how you do it. when I first started trading, I had no idea what a setup was. I'm like, what the fuck? I don't know. What's a setup? I don't even know what that is. Like, it's just over the years, you start to know exactly what lane you should be in, right? What lane you want to be in, and what's going to help you trade, especially for your own personality and all that. Anyways, yeah, Quanted's only $79 a month. You can just get it, and then you do your back testing for a month, and then you just cancel it if you want, if you don't have any use for it for other setups or whatever. I like to use it here and there. I'll usually stay on for a little and then get canceled. But you'll notice, right? Look, guys, another fake breakout of the pre-market high, short trigger. Another fake breakout of the pre-market high, short trigger. Another fake breakout of the pre-market high. I mean, that one didn't give you that big of a trade unless you were scalping. But you see what I'm saying? Look, fake breakout of the pre-market high. Happens a lot. This one would have been perfect if it popped a little higher at the open, fell back down. But, you know, anyways, you get the idea. I don't like to make super long videos, but anyways, guys. If you have any questions, let me know. I'm not a financial advisor. I just like looking at trading stuff, doing trading stuff. And am I recording right now? Yeah, I am. All right. That would have sucked. All right, guys. Thank you again. Hey, by the way, guys, I literally hate when people like beg for likes and subscribes, but it is what it is, right? I mean, I love making these videos, but sometimes I feel like I'm wasting my time. I said this last video. If you like the video and you don't mind, please give me a thumbs up or subscribe to my channel. Honestly, I would appreciate it. And I always try my best to answer anyone's questions. Whether you're in my room, not in my room, I don't care. Because, I mean, at the end of the day, guys, it's just, we're all just like trying to learn how to not blow up and try to make our lives better. And I'm down to share anything that I know with anyone. Whether you're in my room or not, I don't care. I mean, I just like talking about trading and real estate. That's all I like talking about. So if you have any questions, hit me up, or you want me to make a video on anything, let me know. All right? Thank you. Happy Sunday. Have a good day off tomorrow, Monday, Martin Luther King Day. No stock market. Peace.